Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, if you haven't yet already, consider subscribing. Give me a thumbs up. Really helps out the channel. Helps me grow my YouTube channel. I have almost 7,000 subscribers, so I thank each and every one of you. Also, if you want to support me, if you find value in my videos, in my content, in my opinion, you can also consider signing up for a membership to my YouTube channel or signing up for a Patreon membership. Links are in the description below. All right, guys, I realized that when I talked about switchback energy charge point on my previous video, I did not talk about anything about their finances. The video got a little bit too long. I try to keep them under 13, 14 minutes. So the video got a little too long, so I did not include the financials of it. So we're going to talk about some of their financials right now in this video. So thank you very much for watching. Give me a thumbs up. Let's get started. All right, so first of all, switchback energy, which is going to be charge point. I had a little pullback today, down 1.41%, which is not too bad. I'm still waiting for a larger pullback, maybe into the 14s, into the 13s. I'll be interested in picking up a lot more shares of this, but waiting for that pullback. Hope it happens. We'll see. Some people have been asking me in my comments about warrants. So I talked about me buying warrants. I'm heavy on the warrants on switchback. So I just want to go briefly over warrants. I'm probably going to mess it up. I'm probably not going to be really good explaining it. I'll try to do a separate video all about warrants and try to explain it better. But first of all, warrants are only offered on the big brokerages like Fidelity, Vanguard, Charles Schwab. Off the top of my head, that's all I can think about. But like the really big brokers, they're not going to be available on like Robinhood or Webull. So you have to have good customer service in order to have warrants, because you actually have to physically call up your broker, talk to a human being if you want to exercise these warrants. And Robinhood just doesn't support that, so they don't have warrants. So that's one of the reasons why, if you're looking for warrants on Robinhood or whatever platform you're using, and it's a small platform like like Scott Trade or Robinhood, Webull, they're not going to have warrants. They're not going to be there. So first of all, here is warrants on Fidelity's platform. So as soon as you type in SBE, you're going to see a lot of things come up. So they have the units SBE/U. They have the warrants SBE/WS. We're going to talk about the warrants specifically. So these warrants, they expire July 25th, 2026. So basically, a warrant is like a call option, but except when you buy a call option or you sell a call option, you're buying and selling to another investor, another person that has nothing to do with the company. But when you buy warrants, you are buying them from the actual company. So when you want to redeem them, you are redeeming them from the actual company. So when you actually redeem them, you have to call up your broker and say, hey, I want to redeem these warrants. You pay whatever the price is. In this case, it's $11.50. So if you want to exercise a warrant, you pay $11.50, and then they will be able to contact the company, and the company will issue you more shares. So it's a dilutive process. When you exercise your warrants, or when anybody exercises warrants, they have to issue more shares, so it dilutes the overall shareholders. So here is their SEC filing. This is their 8K, and so here it is, the warrants. So they have units SBEU. I'm not going to talk about that. SBE is the common stock, just the stock that people buy every day. People buy the stock. And then there's warrants SBEWS. So you see right there, the exercise price for the warrants is $11.50 per share. So you always have to keep that in mind. If you buy warrants and you want to exercise them, you have to pay additional $11.50. So that is why warrants are typically cheaper than common stock. They should be exactly $11.50 cheaper, but that's not always the case because of multiple reasons. I'm not going to get into that, but they should add up. So, and that does typically happen when the merger comes, like days before the merger or right after the merger. You're going to see that the warrants are basically the same price as the common stock, and that just makes sense because once the merger happens, and I think it's 30 days after the merger, anybody can exercise their warrants, and that there's going to be a huge arbitrage if the warrants are way cheaper. So once the merger happens, the price of the warrants is going to be exactly whatever the stock price is minus $11.50. So here in my example on the screen here, so basically, let's say for instance, the stock price currently is $15. So if the stock price is $15, the warrant should be exactly $3.50, because $3.50 plus $11.50, that's how you get $15. So like I said, that doesn't happen until like days before the merger or probably right after the merger, that's when the price and the warrants are going to be the closest they are because of multiple reasons. One of the reasons is because right now, way before the merger ever happens, the merger could fall through, things could happen. And if you have money in the warrants, basically that's all gone. Your money in the warrants are all gone. But if you have money in the common stock, that is in a trust. So that money will always be refunded to you up to, I think it's like $10, whatever the initial SPACs traded for. So if you paid $11 for the stock and everything fell through, they're not going to go through with the merger, you're going to get back $10. You're going to lose $1 on each share. But if you had all that money in a warrant, you're not going to get anything back. So there's a level of risk. So therefore, that's one of the reasons why warrants are going to be a little bit cheaper, because there's some risk involved in it. So like I said, basically that's my quick overview about warrants. I'm going to do a more in-depth video about warrants, but hope that answers a few questions that people had. So let's talk about their income statement. So here's the income statement. So revenues of last year, so their fiscal year ended January 31st, 2020. So their fiscal year, this is for basically calendar year of 2019. So the revenues last year was 147 million. And they had a gross profit of 19 million. So of course they're not a profitable company. In case you didn't know, they're not a profitable company. That's probably one of the reasons why they're trying to do a reverse merger, get a lot of more money. They're a growth company. The EV market is a growth company. So you shouldn't be surprised that they're not profitable. So they had a net loss last year of 133 million. This is their projected financials. Fiscal year 2021, they are projecting 135 million, and then for fiscal year 2022, 198 million, which is a 46% year-over-year growth. Into 2023, 346 million, and that's a 75% CAGR. So if you added all those years up between 2021 and 2026, they're projecting roughly a 60% average compound annual growth rate, which is absolutely massive. Companies that grow more than 50%, they're going to be absolutely massive, and it's really expected. The whole EV sector is going to boom. Of course, in my opinion, the EV sector is going to explode. And just look out there. Just look at Tesla. Look at all the EV companies, NIO, XPeng, all these popping up. Lordstown Motors, Ford coming out with their Mach-E, with their F-150, Rivian. I could go on and on. EV is going to blow up. Everybody knows this. So of course, the infrastructure for EV has to blow up as well. And so this is the infrastructure play. Very, very strong. Number one player in the EV infrastructure market. Let's take a look at their balance sheet. So currently, their balance sheet, they have $120 million in cash and total assets of $234 million and total liabilities of $172 million. They're going to have roughly 1.3x in cash over their long-term liabilities, but this merger is going to give them extra $458 million on their balance sheet. So with that extra $458 million, they're going to have well over 3x cash over their liabilities. All right, next thing I want to talk about real quick. So infrastructure. Government funding for infrastructure. Both sides of the aisle, Republicans and Democrats, have all talked about we need infrastructure. We need money to rebuild our infrastructure for roads, for bridges, etc., etc., but also for EV. This is the future. So the House already passed the bill. I understand that this has not been voted on by the Senate. It's kind of like dead on arrival on the Senate. There still has to be negotiations, but regardless, there is going to be an infrastructure bill. I mean, I just 100% convinced there has to be an infrastructure bill. And both sides of the aisle agree. They just have to agree about how much, etc., etc. They have to bicker back and forth like government always does. But there will be an infrastructure bill. But just to give you a just kind of a brief overview, there was this $1.5 trillion infrastructure package that was passed. I think it was a few months ago in the House, 233 to 188 vote. And it had $500 billion for surface transportation needs and $70 billion for improving the electrical grid. So also, I'm going to play this video. This has nothing to do with my political views. So, like I said, both sides of the aisle, both the Republicans and the Democrats understand that there needs to be infrastructure. And let me play you a clip of this from the debate.
And I'm okay with electric cars, too. I think I'm all for electric cars. I've given big incentives for electric cars.
Number two, we're going to make sure that we are able to take the federal fleet and turn it into a fleet that's run on their electric vehicles. Making sure that we can do that, we're going to put 500,000 charging stations and all of the highways that we're going to be building in the future.
So there you go. You heard Joe Biden right there. EV is in his future. Building, installing hundreds of thousands of EV chargers along the highways. And also Trump has said in the past that he is pro-EV, he's pro-electric vehicles. He just had the Lordstown endurance truck in front of the White House, So both parties, like I said, are very pro-EV electric vehicles, and comes with it is EV infrastructure. So I think whoever wins, whatever party wins, EV is going to still be front and center. EV infrastructure is still going to be front and center. So that is a very, very big plus for ChargePoint. One final thing I want to show you. So I showed you in my previous video, there's about $30,000 from federal tax incentives for corporations, companies to install charging infrastructure, in their garages and their parking lots. But there's also tons of state government funding. So just as an example, here's New York, $4,000 charger rebate, $5,000 installation for charger vehicle stations. Arizona, $1,500 per port. Rebate is $500 for level 2. Colorado, $3,200 for a single port station, $13,000 for multiple port stations, up to $8,260 for qualified PEVs. So pretty much every single state has some type of incentive. So that's why I think ChargePoint, as well as Blink, but ChargePoint is just the number one player. I always like to be invested in the number one player, especially they have a lot of cash on hand. They're doing this reverse merger, so you're able to get in at the early stages. So they're going to have a lot of installations because a lot of state and federal government money is out there for people to take advantage of. So very, very bullish on it. The more I think about it, the more bullish I am on this company. So I'm looking for this to drop down into the $14 range to pick up some more shares. If it drops down into the 13s, to be definitely loading the boat. But even at this $15 range, I mean, if you have a 5-year outlook, I think it's going to be cheap. So that's my opinion. That's my video, guys. Thank you so much for watching my video, supporting me, supporting my channel. Consider subscribing if you haven't yet already. Give me a thumbs up. Really helps out the channel. Consider YouTube membership as well as Patreon support. Appreciate you guys so much. Catch you in the next one. Have an awesome day. Peace.